Hey, Scrappers, Tom from the iScrap app, and today is Wednesday, September 28th, 2022, and we're going to be doing a once-a-month feature having Mark Champagne coming back into our conversations. As you guys will recall, we've had him for a couple of podcasts before talking about the energy markets. Well, here we are in September, finishing up, quarter three. And I thought that it was important to bring him in once a month and just kind of talk about these inside of the weekly reports. Everyone hears me talk every week about copper and brass and forward predicting of things. So I will talk about some of those things, but Mark is going to talk about some of those prices too. So I'll bring Mark in here. Mark, nice to see you again.
Hey, Tom.
Getting ready for Movember a little early. He's got that beautiful mustache going, so it'll be a good time. But since we talked a few months ago, we've seen crazy energy markets, right? You were predicting the energy prices going crazy, maybe 150 a barrel. We're down in the 70s. We saw copper prices drop $1 a pound. We've seen steel markets drop. On the scrapper side of things, I read a lot of my YouTube comments that they put on these videos that we're recording now. And a lot of people are saying, oh, you said prices were going to go up, prices are going to go up. And of course, the markets have gone down. And, new information changes old information and forward predictions. So tell us what you've seen in the energy markets for the last few months, new information that's come out there, and maybe kind of where it could lead for the rest of the year, helping the scrappers understand the metal markets.
Yeah. So definitely, if you go back a couple months ago, I think I said I have no reason to believe that gas or diesel prices will come down at all. And I think since I said that, they have gone on some 14-week straight decline along those lines. So it's obviously take my words for granted, I guess. But so anyways, yeah, we've seen some interesting stuff go on in the energy markets. And honestly, no energy market is the same. We have things going on in oil that's different than gasoline, then different than natural gas, and so on. I'll start with oil because that I think is it makes headlines more often than not. So to your point, we've seen depressed pricing well below $100 a barrel now on WTI, the benchmark for crude. Most of that is really driven by Federal Reserve interest rate hikes, recessionary fears, coupled with now, in the news recently, we have an incredibly strong currency in the U.S. dollar. Oil is traded, denominated in U.S. dollars, so any countries importing oil will be paying that, obviously large premium now in dollars. So that is also kind of driving demand to go down because they don't want to pay those hefty premiums. On the gas and distillate side of things, like I said, gasoline and diesel prices have really subdued. That is in large part due to the oil price coming down, as well as, recessionary fears for consumers. So that's more of an end user product that, me and you use. If there's kind of that type of got to tighten the wallet up, people might be driving less, traveling a little less, and that could obviously impact overall demand for gasoline and distillate fuels.
Let's talk about that for a second, because I think that is a good lead into some of the scrap, right? Because when people are buying more stuff, right? We talk about people buying stuff or building more stuff. You need more commodities. So right. As you've seen this crazy flummox in the oil market the last few months, now people are talking recession. You see the Federal Reserve raising interest rates, all this stuff. How do you think some of these oil prices, have become so low, and how do you think they're going to affect some of the metal prices going into the fourth quarter of 2022?
Yeah, that's a good question. So, the interesting part here is that with a lot of the metals and, copper, aluminum, and things like that, they're becoming a lot more in demand, more so due to policy reasons. So with a lot of electrification initiatives, a lot of other types of renewable development that we're really, as a country, really trying to accelerate. You can see that through the Inflation Reduction Act, all these crazy tax incentives that are even getting stronger. So with that being said, if you have depressed energy prices, and you have this kind of new mandate on the policy side to start really building out more solar, more wind, even hydrogen, those things, then you might actually see production, increase because your inputs are lower and you still have this kind of demand on the policy side of things where
What does that mean? Explain that a little more.
So on what part? Sorry.
On just the demand and how you're going to see production increase, stuff like that. Production of fuel or production of metals. I'm sorry, missed
Yeah,
that.
no, I was going to say probably on the metal side.
Okay.
So if you have, steel uses different types of oil or byproducts of oil or things like that, natural gas too. So that's the one caveat that we do need to bring up, because I wanted to finish kind of the energy market conversation. Was the outlier is natural gas. Natural gas has quadrupled in the past 2 years. It is not going down anytime soon. That is the only caveat that you're going to see with energy input prices, with steel makers, with miners, with all these things. They're going to try and find substitutes for natural gas, and who knows what they're going to decide. But right now, natural gas is the least economically viable energy input cost, I would say.
And is that why Europe's having such a tough time right now? Because of the natural gas flow?
Yeah, so Europe, obviously, with the Russia conflict in Ukraine and things like that, there's been severe disruptions to their, basic importation of natural gas from Russia. And as we approach now, so winter for natural gas is typically it's high month, or high season, if you will, for heating. So that's why you may see really significant jumps in prices historically if you look back across different winters. But the interesting thing is we're technically in the shoulder kind of season of fall, where you may be able to open windows up. You don't have to turn on your air conditioning, but you don't have to turn on your heating yet. So that really usually lets natural gas prices dip a little bit. But we're starting at a baseline of $8 per MMBTU, where if you look back 2 years ago, that baseline is $2.
And how's that? How do you think that's going to affect some of the metal prices? I'm looking at just the solar panel production, right?
Sure.
And I'm looking at how you're going to need copper and aluminum as the two primary metals, right? How do you think that the demand for copper, the demand for aluminum are going to be affected, which of course we're going to affect the scrapper side of things moving forward with some of these prices?
Yeah, so I mean, if natural gas stays where it is, in which I do believe it will, at least for the next, let's call it 12 to 18 months before you can
the winter months, or because of the conflict.
Because of the conflict, it seems to be that it's going to be a longer term issue. It's going to be a very big issue near term in the next 4 months or so, but I really see this elevated pricing staying here for another year, 18 months or so, because mainly that is due to the LNG capacity. So the United States is really trying to ramp up their exportation ability of natural LNG, liquefied natural gas. But they can't do that overnight. They need permitting, they need and they're looking and expediting all these types of projects. But the fact remains, you can only get a certain amount of gas out of the country to the demand centers of Europe and Asia until you get more capacity online.
I read something else that you wrote, and and it's funny. It's called the oil piggy bank, is how you kind of phrased it here, right? And I'm interested to see how you think this is affecting some of the metal prices. We had during 2020, I think when Trump went and bought all the fuel reserves, over 600 million or more barrels of oil in our reserve.
Yep.
And you wrote that it's now been cut in half, mostly this year, which is my guess why we've had 14 weeks of declines after June, right? Which makes moving scrap a little cheaper nowadays, and maybe the demand for scrap is a little cheaper, but there was like a domino effect from the beginning of the year. How do you think that that's going to affect the metals market going into the rest of 2022, but really to me into 2023?
Yeah. So I mean, as you can see this chart, it's kind of alarming of how we have really just drained the strategic petroleum reserve over the past, and you can't even really see the months, but it's been only a couple months there that we've nearly cut our supply in half. Coupled with that, OPEC, the cartel that kind of controls oil production for the most part, they've actually underproduced by about 3.5 million barrels per day. So there's rumblings about an oil supply shock. And what that would mean is obviously supply kind of just becomes completely dried up. No one can find oil. We can't replenish that strategic petroleum reserve. So then let's call it the assistance that we've been able to provide with declining gas and distillate prices through that strategic petroleum reserve, if we can't replenish it, or if we can't, keep drawing on it, then we might actually see strength coming back to gasoline and distillate prices, even during a season where typically gasoline prices and diesel prices are cheaper because of the winter versus the summer. So you usually have a premium on summer pricing for gasoline and distillate fuel versus winter, but that actually might not hold true if there's an oil price supply shock coming our way in the next 2 or 3 months.
So this could be something where metal prices went up really high in 2021, right? Oil prices starting to increase in 2021. We got into 2022. We saw the conflict happen. Metal prices were still high the first 2 or 3 months. Oil prices started to go up really quickly.
Yep.
From there, we started to see commodity prices going down, because when it costs more to move material, when it costs more to refine material, now you have energy prices going up. You need to pull the money from somewhere. So then for the last 6 months, we've had depressed commodity prices because really we had high energy costs, which has hurt the scrap market. So there's still been demand for the metals, but you had to pull prices from somewhere. Now, from what I'm hearing you say, going into next year, we actually might have a quick slingshot back where energy prices, because can we see that chart again with the strategic reserves, where we went from 700 million barrels to 350 million barrels. And that was one of the reasons the price went down so much. We can't do that again and again and again. So you might actually see a slingshot effect happen where the prices go back up. But do you think the metal prices will follow it going back up, or do you think it'll stay lower? Here's the chart. Do you think the metal prices will follow it?
I mean, I think that's tough to say, but based on, a lot of times what you want to do is look at historical patterns, and you want to see what the catalysts were in the first place. And to your point, when metal prices first did shoot up, that was a big catalyst. So there is a very real possibility that you could see a pretty big rebound in metal pricing, given the fact if there is an oil supply shock that hits the market. So it's unfortunately the crystal ball. We never know if it will work or not.
We've seen that over the last few months with all of our predictions. I mean, exactly. I've been eating my words too. I thought we were going to have metal prices recover, but again, your information and my information is just absorbed from other people's information. We've had a lot of people wrong the last few months. Right.
So yeah, I mean, it's definitely certainly a possibility, but it's kind of like a time will tell. But yeah. So
one of the things that we've talked about before, and I think that it's important to bring up again, because I saw something recently, it was like 9% or 13% of vehicle sales in this year are going to be electric, which means that there's a increased demand for lithium, which has just had crazy prices like $80,000 a ton, right, going up. You've also had increased demand for aluminum. You've had increased demand for copper. So that's a good thing, right? Whether you like renewables or you don't like renewables, right? Clean energy, wind farms, solar panels. There's now a new place where metals are going to be needed, and that's in the renewable sector. So from an energy side of things, going into the next few years, how do you see this renewable energy, this clean energy sector pushing forward? How do you think the demand on needing more metal and then in turn needing more scrap and pushing the demand there, how do you see that being over the next few years?
I think that if you read anything, IEA, EIA, all these big, either government-backed or privately held kind of think tanks and white paper reports and things like that, they're expecting double-digit growth in a lot of different metals, given the fact that we have now really constructive policy to build out a lot of these renewable energies. Coupled with that, I would say that, if you look to how much actual material goes into these types of, either a solar panel or a wind turbine or something along those, or even just, again, electrification. Copper is that must need material to electrify buildings, to electrify, putting it in EVs.
Cars.
Exactly. Yep. Things like that. That's going to be it's going to continue. And with EV specifically, we had legislation passed where there was more and more financial incentive for consumers to go out and purchase new electric vehicles.
Credits.
The problem that we have right now, I think, which is really important to harp on, is availability of these materials. So historically, we were able to kind of globalize our supply chain. We could take it from China, we could take it from other areas that were able to produce the lithium, produce the iron, produce the copper from all different types of mining that they've set up there. But now we've realized through the past 2.5, 3 years of a supply chain meltdown, there's a big push for domesticating all of that type of material production. So that's why you're actually seeing, a really good example, I think, is, Berkshire Hathaway. So they're a big conglomerate, and they own actually a lot of different renewable projects and even utilities in the out in the West Coast. And what they're doing is actually creating lithium mining in California. They are actually going to start producing lithium in California to supply their renewable production of solar and wind farms.
Wow.
And that's something that typically we haven't really seen. That's kind of going from, the very start of your supply chain all the way to the end where you actually put the farm and, get it operational. Usually you would rely on outsourcing
other countries
at some stage. Exactly.
Yep.
At some stage of that value chain, especially towards the beginning of the actual mining process, that would be typically global, internationally, just trying to figure out how to source it correctly. But now they're trying to own that entire value chain because they don't want to be exposed to, obviously, the meltdown that we've seen from a global supply chain, perspective these past 2.5, 3 years.
And this chart, to interrupt you, back in 2000, right, we saw metal prices from 2000, 2003, 2004. You and I might have been in college or high school, whatever it was, right? You started to see metal prices increasing, and that was largely because the Chinese were building their own infrastructure, and that's where we started to see scrap prices going up. So then you can fast forward a few more years. We saw different financial problems, right? Now we see India is starting to build up their infrastructure. Now you see a worldwide push from Europe to the United States to China wanting to do this EV push. So again, scrappers, I don't care if you like electric vehicles. I can't see most people buying, Teslas to go scrapping tomorrow, right? Even this Cybertruck, right? But if you look at this chart, and we can compare this to scrap, nickel, that's from stainless steel. So they can take stainless steel, they can melt it back down, they can get the nickel out of it, they can use nickel in some of these electric vehicle batteries. And to what Mark said, some of these batteries that are going to store energy from solar and wind initiatives. That's a good thing for scrap. Aluminum is strong, it is durable, Ford, for instance, like in my F-150, I have an aluminum frame. It's lighter. It gets better gas mileage than my older trucks used to do. That's really good for scrap prices. So then you have like the Ford EV, right? The F-150 electric or Lightning, whatever the heck it's called. That's going to need more aluminum. Iron, you're going to continue to need it for these engines, for different structures, for parts, for the rebar going into the ground. That's really good. Copper. I'd heard something today, Hertz talking about putting in 100,000 charging stations, right, for electric vehicles. By the end of 2024, Hertz wants to have 25% of their fleet electric. So the demand for copper, whether you like EVs or you don't, scrappers, right? What Mark is saying from an energy side, the metals are going to be needed. So forget about wanting an electric vehicle or spending 70 grand on one or whatever it is, because internal, combustion engines, these ICE engines aren't going anywhere either. So you're still going to need these parts. So Mark, going into 2023 and 2024 and really through 2030, because I don't want to get much further than that, the demand for energy is only increasing as the population increases.
Right.
Which means the demand for metals is going to be increasing. And while we might be in one of these dips right now when it comes to scrap, where do you think the metals are going the next 5 to 7 years?
Yeah, I mean, I think that chart really summed it up perfectly. It's kind of pick your dealer's choice. It's going to be a lot of different metals that are going to need, you're looking at 14x, 10x, 9x. I mean, it really
big numbers
across the board. The interesting part about, from an EV perspective is I think in one of the weekly reports, we had talked about lithium ion batteries now being almost commercially challenged to batteries that actually are aluminum based, iron based,
yes,
other materials that
cheaper materials.
Exactly. So if that trend comes and those batteries become more commercially available and used by, let's say, if Ford decides to make all their EVs run on aluminum type batteries, who knows what that could even do to this chart moving forward.
And you could also make the prices of the vehicles drastically go down too.
Yes.
And then you could also have energy prices eventually coming down after this humongous infrastructure push to have more clean energy, where this push for clean energy in the next 5 to 7 years is going to be sucking a lot of these metals in, which is a good problem for scrappers.
It's a great problem. It's an absolutely great problem. And I think even from a recycled, metal standpoint, that's going to be, if not in more demand than actual metals, or just about there, because you have to remember that a lot of these companies who are trying to develop these solar farm, wind farms, EV infrastructure, charging stations, they would love to be able to say that their carbon footprint in the actual building of these types of things is less because they use recycled versus
like Apple's doing.
Yes, exactly. Yeah.
And if anyone has looked at Apple recently, they're getting rid of their plastic. They want to be carbon neutral, which means that whatever energy they're putting out there, they're producing it in-house or recycling it, which eliminates more mining things and stuff like that, right?
Yes. And obviously there's caveats to it. Let's not make recycled completely net zero, what everyone's trying to advertise it as. But you're going to see a lot more major, Fortune 500 companies. They're getting investor pressure. They're getting, market pressure to say, what are you actually doing? How are you going to achieve? Because a lot of these companies have publicly communicated, I'm going to be net zero by 2050. I'm going to reduce our carbon emissions by 30% by 2030, so on and so forth. But the problem is a lot of investors aren't buying it. And that could actually create outflows of capital from their stock into other more, sustainable companies. So the threat is that this becomes, kind of a exodus of companies who are promising everything but delivering nothing, and moving that money into more sustainable companies as ESG and that type of funding becomes a little bit more scrutinized by the Securities Exchange Commission, other policy, things like that. So that part is real. The money part is real. If companies are losing investors and capital because they are not, environmentally conscious, that will change. I promise you that. So
we're going to wrap this up. We're going to talk to you next month, and I look forward to seeing how many predictions that we have are right versus how many are wrong. I listen to a podcaster, and every Monday he talks about where he was right and where he was wrong, and generally there's more wrongs than right.
The scoreboard in the back here or something.
Yeah, I mean it's not going to look very good. I mean it's like me picking NFL games recently. There's no winners that I can get. My kids do a better job just picking off of the different team logos. So this was awesome. We'll touch back in a month or so. This way we can kind of see where the energy markets are developing, where the scrap prices are developing. I think this will be a cool thing. Scrappers, we look forward to you asking questions. Please ask us questions, because those questions will help us develop our dialogue next month. We'll go into them a little more. Mark, always a pleasure. Thank you for popping on here. And scrappers, I'll scrap you later.
Thanks for checking out this scrap video. For more exclusive scrap video content, please become a YouTube member of our channel today. Thank you, and I'll scrap you later.